Hi folks, Lee Gettess here with the Market Sense for the week of February 9th, 2016. Don't forget to get your Valentine's Day stuff for the weekend. We're going to look at charts that come from the Trade Navigator software, one of my favorite tools. And looking at the weekly bond market chart here, is that impressive or what? I like to point out right in here is where the Fed raised interest rates. Interest rates move in the opposite direction of the bond market. Apparently, bonds disagreed. We thought support might come in the 162.16 area. They've actually not been down that far. We thought there might be resistance here at 165. Yeah, well, that was a ways ago. I can find some more resistance up above 168, but that's just kind of foolish to discuss. You don't want to step in front of a market like this. It's obviously drastically overextended, and it'll probably have a pretty good crack at some point. But you don't want to be the hero to try to predict where that is, because wow. Janet Yellen gives testimony both Wednesday and Thursday in front of Congress for her viewpoint on the economy, and I heard from someone else that this is the first time in 55 days that anybody's heard from Janet Yellen. So that ought to be kind of interesting, but I'm not sure she can say anything that'll knock this market down. It's wow. That's about all I got to say. Stocks, of course, look drastically different, and in fact, you could say they're holding up rather well considering all the fear the bond market seems to indicate. This low back 3 weeks ago here almost certainly has to be tested at some point, and to be honest, this is a little quick to be back down here again. So either this isn't a test and they're going to roll up out of here, or this isn't a test and they're plunging right through it, would be my guess. We thought resistance would come in roughly the 1890 area. They have not been to that. They could still go there. It could also mean they're just too weak to get there. By the same token, good support, or should have been good support, in the 1840 area here, and they've gone a fair distance through that. They're above it now, and they may continue to trade above it, but they didn't hold it at least accurately. And again, if they come down here, yeah, a test of this low is a distinct possibility, but gee, it's just kind of not looking like that. If they go down there again, I think they might just keep going. But I don't want to tell you I'm predicting new lows because they are above the support at this point. So there's a tendency, the possibility they could rally to the 1890 area, and heck, up here to 1925 or so. I mean, there would be nothing that looked wrong about that on the chart if they do that. Something's going to happen to prop them up, though, because they sure go down easy. So that's what we've got for you today. I hope you can find something to profitably get yourself involved with. Thanks for checking in to see what we think.